Tired of watching your leveraged long position get wrecked by short-term dips? Let's walk through exactly how to dollar cost average, or DCA, into a leveraged long position on Bybit to potentially lower your entry price and manage risk. First, log into your Bybit account and navigate to the trading pair you're interested in. Instead of market buying, we'll be using limit orders for DCA. This allows us to buy at our desired lower prices. Select limit order from the order type options. Now, let's say the current price is $30,000, but you want to DCA if it dips. Set your first limit order slightly below, say at $29,800. Importantly, only allocate a small percentage of your total planned investment for this first order, perhaps 20%. This is crucial for DCA. Repeat this process, placing several more limit orders at progressively lower prices. For example, $29,600, $29,400, and so on. Each order should again only be a small portion of your total intended investment. As the price dips and your limit orders are filled, your average entry price will decrease. This cushions you against further downside and increases your potential profit when the price eventually rebounds. Remember, DCA doesn't guarantee profits, and leverage amplifies both gains and losses. Manage your risk carefully, and always do your own research before trading. Good luck.